getting any work done because we're constantly dealing with all these problems here. Getting back to the banks, we mentioned before that banks are falsifying credit card lawsuits in 90% of the cases here. So every aspect of the financial system is operating as a criminal enterprise. It's all fraud here. Now, there's a class action lawsuit getting underway against 8 financing companies for abusive foreclosure practices in Ohio, where they basically preparing, executing, notarizing fraudulent court documents, an assignment of mortgages, and lawsuit is saying that they would had a different division of the company would go to the people being foreclosed on and offer to help them manage the default and charge them unreasonably high fees. They're getting you at both ends. They screw you up with a fraudulent mortgage, and then they offer to sell you help in just how you're going to come out of the mortgage. And they're overcharging you for the service, and you don't know which side the default management company is on. Are they really there to help the homeowner, or are they there to help persuade the homeowner to just go along with the foreclosure? And the homeowner is going to listen to this because this is their paid expert helping them, and they don't realize they're owned by the same mortgage company here. And a lot of this is going back to this issue where you cannot foreclose on a house unless you have both the note and the mortgage. It's not legal standing to foreclose on the homeowners. And when the clients did not have the proper documents, this lawsuit is saying they just faked them. They just faked them. Great deal of fakery. You know, what an irony that this is taking place in Ohio, because I happen to have an state of Ohio notary stamp. So I can just put that on there, sign a thing on there, and it's now an official notarized document in the state of Ohio. And of course, like everything else on paper in the United States of America, it's completely and utterly worthless. But this stuff is just continuing to go on. Now, there's an interesting story out of Arizona. There was a 52-year-old gentleman who, because of health problems, had fallen behind on his mortgage. And the bank said, we're thinking about foreclosing. So he calls up the payment office at the bank, and he says, what do I need to pay you to bring my mortgage up to date and stop the foreclosure? And they told him $21,573. So this guy sends the money to the bank. The bank acknowledges receiving the payment, and they still foreclosed his home. These banks are not, they don't care. They don't care. They're looking for excuses to seize properties. And they figure if somebody catches them doing something wrong, they'll just hire more lawyers. And the reason they're doing this, the reason they are so predatory, the reason they're willing to break the law and take homes whose mortgages are up to date, in some cases take homes where the mortgage is with a completely different institution. In a couple of notorious cases, they foreclosed on homes that didn't even have mortgages. And the reason they're behaving like this, and the reason the government is letting them do it, and I've mentioned this before, that monthly payment you are making on your mortgage, your car loan, your student loan, whatever, is not enough to save the banks from becoming insolvent, as they continue to have to spend more and more money to clean up the mess from the mortgage-backed security fraud. In order to stay technically solvent, they need the full value of your house on their balance sheet as an asset. Not just your house, but millions of houses across America. And they're not even taking care of the houses. They're not paying the upkeep. The properties are going to be... They don't care, because that's down the road. And right now, they just need to keep that bottom line number on the balance sheet out of the red so that they can stay in business and go on doing more of what they're doing. Now, the Washington State Supreme Court has ruled unanimously that the mortgage industry's system, the MERS, the Mortgage Electronic Registration System, which is at the heart of a lot of this mess, lacks authority to start out-of-court foreclosures and has probably violated state consumer protection laws. Now, there are two issues with MERS that we need to look at. The first is it's a tax avoidance scheme because most states, in fact, I think all 50 states, have a tax on transfer of a title to a house. And so with all of this bundling of mortgages and notes and titles and all the rest of it, every time they changed hands, the tax would be applied. So the scam was to put all the mortgages in this mortgage electronic registration system, and that became the owner of record. And then they would simply pass around the tokens as to who had the links to which mortgages. And it was a huge tax avoidance scheme. So even as these people were making billions and billions of dollars, I'm starting to sound like Carl Sagan, billions and billions of dollars wafting across Wall Street, and they were stiffing the taxpayers. They were stiffing the state governments. And the other issue is, and I raised this possibility before and nobody really talked about it, what if there was a software problem? Because the group that runs MERS, it's a small office. They don't have a lot of people. What if there was a software problem, and this is the root cause of why so many notes got disconnected from the mortgages and why so many mortgages wound up pledged multiple times into different financial offerings? That may be a Gordian knot that nobody can untie. Meanwhile, at the state level, local governments are starting to look at a rather heavy-handed option to deal with underwater mortgages. Seize them under eminent domain and declare the properties technically condemned, so the mortgage would default and simply go away. We have a caller on the line, Lori in Ohio. Welcome to the show. What is on your mind?
Hi, I just happened to be listening, and I heard you were talking about the Ohio class action, and I am one of the lead plaintiffs on
Ooh, good for you.
Class action.
Please continue.
So, yeah, actually, I just caught the tail end of what you were saying about the suit, but you're absolutely right. This behavior that has been, being ignored, by everyone, and is being supported. They have their support system as well with the servicers and the attorneys, and they can't do this all alone. So there's a lot of people, putting their hand into the greed machine.
I like that phrase.
Crank out these documents. Pardon?
I said I like that phrase, the greed machine. I'm going to have to steal that from you.
Well, that's exactly what it is, and that's what it all boils down to. This is all about what is good for them, what's lucrative, and there's nothing going on that's helping the homeowner.
No, there isn't at all. And again, this goes back to a policy decision that was made in 2008 when it all started coming apart. And they knew there was going to be a problem. The warning signs were there, but the Bush administration was trying to sort of cover it over ahead of the 2008 election. Didn't work. It fell apart 1 month before the election. But they made a policy decision that they weren't going to investigate or prosecute any of the criminal wrongdoing. They were just going to loot the American people to save the banks because they had to protect the reputation and trustworthiness and credibility of the American financial system. And even the IMF now is starting to hem and haw in their official statements that maybe that was not such a smart idea, looking back over the years of devastation here, that maybe Iceland did have the right idea. That bankers should not be above the law. And, of course, we all know about Obama's foreclosure settlement, where they went around to all 50 states and they arm-twisted the state's attorneys general to drop all investigations and proceedings on the assurance the federal government would look into it and take care of it. And all the federal government did was sort of retroactively indemnify all of these financial services companies, and then they hit them with a token fine. I mean, to you and I, it sounds like it was a lot of money, but when you look at how much the mortgage-backed security fraud cost the taxpayer, and when you look at how many billions of dollars all of these financial managers were making in compensation, the fine, it's a wrist slap at best. And when you send a message out like that to the financial system that you can pull off a fraud of that magnitude and nothing will happen to you, they're going to do it again.
Well, absolutely, and that's what they're continuing to do so. Again, until it's people like myself that are trying to use every resource available to fight back and stay in their home. I'm facing an eviction on this coming Wednesday.
Oh, I'm so sorry to hear that.
We are negotiating. We're still negotiating. You know, it's ridiculous that we're in the situation that we're in to begin with. You know, this is truly to no fault of our own. You know, we have filed part of the class action as a lead plaintiff. We have filed additional lawsuits, based on fraud against some of the servicer, the mortgage broker that was supposedly, doing an H for H loan for us, an FHA Hope for Homeowners loan, who was in Ohio. They push you. They find the homeowner and they see, one little weak link, and then they just further push you into more of a distressed situation.
Yeah, well, that's basically it, because the goal is to get the entire value of your home on their balance sheet. They don't care about that monthly payment.
Exactly.
Yeah.
Exactly. Why would they help the American homeowner, whether they're underwater and current in their mortgage, or if they are in a situation where their hours got cut and they need a couple
Helping
months
the homeowners is not the issue.
Why would they do that?
Helping the homeowners was never the issue. Even with all this talk about, assisting the homeowners, and all of these mortgage modifications turned out to be a trap, where they were telling people you've got to be 2 months behind on your mortgage to qualify for a mortgage modification. They'd slip 2 payments, and the next thing you know, they're in foreclosure. It was just another way of scamming people, because the goal is for the banks to take possession of all the real estate as assets on their balance sheets to stay solvent. What is going on here is wealth confiscation from the American people, just like Roosevelt did in 1933, only it's done in a very tricky way to fool you into thinking that this was all your own fault that you lost your home. And it's good that you know it wasn't your own fault.
Well,
An effective 100% organic nutritional supplement is now available to be shipped out to you.
Class action suit against all of these mortgage companies. And the important thing to remember is that Obama's foreclosure settlement stopped all governmental investigations, criminal investigations into the behavior of the banks and the mortgage companies. But he can't stop civil lawsuits. Every American citizen has the right to go into a court and file a lawsuit against these companies. Now, that's the good news. The bad news is we are starting to see federal judges who hear these cases start to come up with some pretty bizarre rulings in order to protect the money junkies. And there was a case this last week involving one of these companies that was up to their neck in the mortgage-backed security fraud, and they were caught commingling what are supposed to be segregated depositor funds with their own investment funds, and lost it. It wasn't MF Global, but it was another company like it, and I can't remember off the top of my head which one it was. But the judge basically ruled that since the financial institution did not intend to harm their depositors, there was no reason to proceed with a criminal investigation. And this is extraordinarily bizarre. They broke the law. If you run somebody over on the street by accident, obviously there was no intent to harm that person, but you're still going to lose your driver's license and probably go to jail. There is a law. Don't hit people on the street. There is a law. Keep depositor funds segregated. And the financial institution broke that law, and the judge just basically let them walk on that, which is why we have so many financial writers saying right now, be very careful where you have your money, because the legal protections of your money inside a bank are just about gone. So, Lori, would you do me a favor and drop me an email, because I want to put you in touch with a guy named Bill Shaw, who used to be a regular guest on our show, and he's going to be coming back on in the near future. And he and his associates may have some advice for you. So send me an email, and we'll trade some info. Okay?
Sounds good.
All right.
Thanks so much.
All right. Good luck. I hope you keep your home, and we're going to switch over to John in Arizona. Aloha, John. Welcome to the show. What's on your mind?
I'm a little confused about this foreclosure issue, because what I was hearing for a long time was that the banks were somewhat reticent to foreclose, because if they did, then they would have to show the actual value of that property on their books. I had a friend who was in foreclosure for 3 years, and they didn't go after him, and then finally they forced the issue. I don't know why, but I'm still not understanding if they foreclose those homes and then they put them on their balance sheet. don't they have to show the market value, which is far less than if they just had them out there?
Well, the thing is, even a reduced market value represents a lot more